We've been talking all week about supply crunch and demand shock. From an automaker's perspective, which is more important right now?
Well, I think it's morphing. Originally, it was the supply chain, but I think you're starting to see Chinese factories come back. And I think you'll see some sporadic closures of lines probably towards the end of the month, maybe focused on smaller automakers which may have not proactively reconfigured their supply chains after the events at Fukushima a few years ago. But I think for the most part, the issue really now is the consumer, and it really comes down to consumer confidence. You're seeing the market in China, where this coronavirus obviously first had the outbreak. Sales were down 80% in February. They came back a little bit at the end of the month. But the big question is, what does it mean for the American consumer around consumer confidence? And I think to your point around, is it supply chain or consumer? Listen, in supply chains don't have emotions. They don't have fears. You can fix them. Consumers do, and that's going to be the big question about visibility for sales for the automakers going forward.
Do you expect to see more discounting, more promotions, more marketing coming out of the auto industry the way we have after economic events in recent decades?
I think you'll see a combination of both. I think you'll see a combination of more marketing efforts, probably more incentives, but also at the same time, I think the OEMs have been very disciplined, and you'll see reductions in production as appropriate. But we'll have to see going forward where that kind of plays out. And the other thing that I think is impacting is consumer confidence is not only the coronavirus, but if you think about it, given average transaction prices of over $34,000 in the industry, it's primarily wealthy or more wealthy consumers that are buying new cars. And those are the kind of consumers who tend to have brokerage accounts. And in any given day, if you're looking at your brokerage account balance and seeing it go down, that is also going to impact consumer confidence in a negative way.
What do you think this does to companies' plans around investment and around basically transformation right now?
Well, you're right. You have a lot of companies going through transformation, which means they have to rely on their quote-unquote traditional business to fund some of these new transformations. And I think probably almost every CEO across the country right now is doing a couple of things. They're probably telling their organizations, first off, I want a clampdown on all discretionary spending. I want to freeze hiring. I want to look at all big CapEx expenditures and maybe hold off, because we're going into a time of uncertainty with, as you mentioned, kind of not a lot of visibility of what's going to happen with the consumer and, with markets in general. And in those cases, you're seeing a lot of clamping down. But I also think you'll see a lot of these companies that are going through these transitions, they're not going to let up on their investments for the future. The key is, how are they preserving their profits now through the actions that I mentioned to try and continue those investments for the future.
Is going to make it take longer for EVs to capture a significant amount of share, or does it happen quicker because what's happening to sales of traditional vehicles?
Well, when you look at EVs, I mean, the future of EVs are bright. The question is, what's the adoption rate? And one of the biggest hurdles right now for electric vehicles over the next couple of years is their higher costs than internal combustion engines. And if you think about an economy that potentially may decelerate because of what we've discussed this morning, that could make the adoption of EVs actually slower unless governments come through with more incentives, which we haven't seen that here in the U.S. You've seen them pulling back in China on that. That's been impacting sales. So you could argue it may slow the inevitable rise of electric vehicles for the time being.
And then I wonder how you would rate Asian OEMs versus American versus European. Who's been faster to respond, at least so far?
Still, to your question, I can't kind of handicap them all right now. It's still playing out. And I think the real arbiter is going to be, who are those OEMs that are taking proactive actions now to lock down costs to anticipate potentially lower revenue over the next couple of quarters.
Yeah. Finally, the CFO of Amex this week said, I'm glad I'm not an airline CFO right now. Are you glad you're not an auto CEO?
Well, I've always loved the auto business. The auto business always has a lot of impact on the economy.